Hello and welcome back to Financial Reaction. This video series is dedicated to tracking a portfolio of $10,000 per investment across a wide variety of dividend-paying vehicles. We have different groups. We have our dividend aristocrats, which are stocks on the dividend aristocrats list. These are quality big companies that pay dividends usually quarterly, and they have a history of raising their dividends over time. Index funds is the funds that track specific markets like the S&P, the Dow, different Russell 2000 or whatever. There's just a variety of those. Rec shares, Roundhill, the two YieldMax, Defiance, and Granites. These are weekly paying dividends, so those we'll start having numbers for. Monthly ETFs, these are some of the bigger ETFs that pay a monthly dividend, and monthly dividend stocks. These are a lot of REITs and stocks that pay monthly dividends, but their dividends fluctuate, so they're not really considered dividend aristocrats. So I started this last week, and we will not have a lot of data on the first two because it's only been a week, so we'll check back with those. So let's go over and get a broad view of the weekly dividends. As you can see, each of these shares started with a whole number. I started with the closest round number to $10,000. So many of these started a little under $10,000. As you can see, they've all raised in value. I do have the starting price of each one here, and I'll clean this up. This was the entire portfolio. As you can see, most of them are around 9,900, 9,800 in that ballpark, depending on how expensive the stock was. I hit that one right on the noodle. Also, you'll see some of these have a profit and loss already. That's just because the price changed after I had entered it in here and before I got to it in the dividend tracker. So what kind of dividends do the weeklies pay? They're going to be probably on the lower end, so like 10 cents, 5 cents. So these are small, but they're weekly, so they compound quickly. And as you can see, we even have some that have gone up even though the market's dropped, so these three were really good. We did, as you can see, it's March 15th at recording, so we're a couple weeks into the conflict with Iran, and the markets have been troubled, so there will be a lot of downturn for now, but you have to realize that the overall value of the holding is down because the stock market as a whole is down. So this is not a great surprise, even though this portfolio is actually up a little. Look at that. It's up a hair, so that's not bad. Roundhill, you can see Roundhill's really done poorly. And we only have a couple of winners here. So three, well, that one's neutral. So we have two that are actually profitable. Let's see, declared. We got 16 cents, so that's a decent payment. On this tab, you'll see annual dividend. That's for the portfolio. And the annual dividend on general, this will be per share. So you'll get $8.31 per share on a $32 stock. So that's about a third. So that's not bad. You get a third every year. So it's less than 3 years to double. As you can see, that's 25% on here. Oh, if I could do math, it's 32, sorry. That's a quarter, not a third, yes. And then if you go down, you can see the payment history, and it goes up and down. It's up to 50 cents and then back down to 16. So these will be an overtime thing. Like I said, 1 week you really can't see much. You got a 16-cent dividend here. YieldMax Group 1 is down. Some of these they don't track individuals. They do it on group funds, not individual stocks. So like this one paid 23 cents on a $25 stock, which is your annual return is going to be 100% compounded. So quarterly, so $10,000 a year, and you started with a $10,000 portfolio. So you'll like double your portfolio every year if this holds. But like I said, this has only been a week, so let's not get ahead of ourselves. YieldMax Group 2 is the largest group, and it has, like you'll see, 3 pages. Of information descending. So this one actually had a lot of winners. Defiance is a winning portfolio. Granite Shares is really underperforming. Monthly ETFs is down. Like I said, the stock market, you can see the stock market overall has been falling. So the monthly ETFs, the dividends, the index funds, and the monthly dividend stocks, this price will reflect much closer to the overall stock market. And what are these? A lot of these are like REITs, so property management. They pay monthly dividends. As you can look at the names. I do own this one myself, so let's take a look at it. Let's see, 27 cents. Let's take its history. As you can see, it's 5% annually, so that's fine. That's not about what you would expect for a monthly. These aren't high yield. These are just regular dividends. So you can see we're in the monthly, and it's been steady at 26, 27 cents. So this one's really steady, which is why it's so popular. And that's how this portfolio tracker is going to work. So if you're interested in individuals, I assume you can use Yahoo or any of the just Yahoo Financial or any of the financial sources online. So we'll just take a look. CWII, you can just go in. CWII, there it is, and then it'll pull it up. It'll give you a chart. You can go to, if you prefer candlesticks, you can set it up to look at it that way. 6 month, it'll show you your dividend payments across the bottom here, and then you'll have your candlestick. It'll show you can have your volume indicators, and you can this is your comparison. You compare it to other IXIC, which is a fund. You can track it against that. As you can see, over the 6 months, year to date. So let's look at it a year. You can see it's dropping, and this has it on a percent. Let's pick a different one. We can go COII. This goes 6 months, so you get a price on this one, so you can see the price over time. You'll notice most of these have a NAV erosion problem. So what you're looking for in these is you're probably looking for one that has a flat price over time or slightly rising, so the dividends can keep up with the NAV. And if you're new to investing, honestly, if you can find a local investment advisor who will give you like a free consultation, that's your best place to start. Like I said, this is just a limited snapshot of these particular funds, which I kind of enjoy following. I don't actually own a lot of them, but I own a couple, to be fair. And no, I didn't invest $1.7 million into this portfolio to build it. Wish I had that kind of money to just play around. But over time, we will get more and more information, and you can make better and better choices. So remember, this is just for your information and for your knowledge base. Like I said, go do your own homework, and if all possible, find a professional who will give you a free consultation to get you going if you haven't started yet. And I'm going to go ahead and wrap this up right here. Hopefully in the future we'll be able to get more data to make more meaningful predictions and assessments. But remember, in life, take care of your body, take care of your finances, and plan for your future. Live well. Hope you guys have a great day, and we'll see you in the next video. Thank you so much for joining me, and once again, if you could, go ahead and like and subscribe. Thank you.